Hey everyone, welcome back to Corporate Decoder, the place where we uncover the hidden stories behind the corporate world's financial theatre. Today we are diving into a brand new company that has just hit the stock market with its initial public offering known as an IPO. We'll be looking at their very first official report to see what it tells us about their plans and how their early days are looking. Before we get started, make sure you are subscribed to Corporate Decoder if you love getting clear and simple explanations of complex financial documents, and join our Discord community linked in the description below to keep the conversation going. Alright, so the company we are looking at today is AI Infrastructure Acquisition Corp. Its name frankly tells you a lot about what they are aiming to do. They're essentially a special kind of company that goes public with the sole purpose of finding another company to buy and merge with a special purpose acquisition company, or SPAC as they are commonly known. They raised a substantial amount of money through their IPO, and this report essentially tells us how that happened and what they did with the money right after. The key date here, the 6th of October 2025, marks the actual consummation of their initial public offering, which is a fancy way of saying they officially sold their shares to the public and got the money. They offered over 13 million units of their company. Now, a unit here is not just one thing, it is a package deal. Imagine buying a combo meal. It comes with a few different parts. Each unit consists of one ordinary share, basically a piece of ownership in the company in one. Right? Think of this right as a coupon that gives the holder the chance to get a fraction of another ordinary share in the future. This is all pretty standard stuff for these types of acquisition companies. They priced these units at $10 each, which means they brought in a massive $138 million. That is a lot of cash right from the start. But that is not all. They also did a private sale of additional units to specific investors, including their sponsor AI Sponsor Limited and another group called Maxim Partners LLC. These private sales added another $4 million to their coffers. So in total, they have a whopping $142 million in gross proceeds from just these two events. Now here is a critical piece of information for any SPAC. All that money raised from the IPO in the private placements over $138 million is not just sitting around in some regular bank account. It has been placed into a special trust account in the United States managed by a trustee. This is a regulatory requirement and it is a safety net. You see, the company has a limited time, typically around 2 years, to find a suitable company to merge with. If they do not find a suitable business combination within that time frame, the money is supposed to be returned to the shareholders. So this trust account is where the money sits waiting for its ultimate purpose. They also tell us that an audited balance sheet is available. This is basically a snapshot of the company S Financial Health on that specific day, the 6th of October 2025, showing all the money and assets they have at that moment. It is like the company S Financial report card for the very beginning of its public journey. This report confirms the money has come in and it is accounted for in that trust. Looking at the financials, the most important number right now for AI Infrastructure Acquisition Corp is not revenue or profit because they have not started any significant business operations yet. The critical number is the cash they have in that trust account. As of the 6th of October 2025, they had $138 million. This is their war chest, their fund to go out and acquire another business. This number signifies their potential acquisition power. Now let S talk about what this means for investors and for the company, S future direction. AI Infrastructure Acquisition Corp is essentially a blank check for investors who believe in the management team, S ability to find and merge with a promising company in the artificial intelligence infrastructure space. Their strength lies in the capital they have raised and the focus of their acquisition target. Their weakness, of course, is that they have not yet identified or acquired a target company. The entire future of the company hinges on the success of this acquisition. The main risk is that they may not find a suitable company to merge with, and the funds will be returned to investors. Alternatively, they could overpay for a target or merge with a company that fails to perform. The opportunity, though, is significant if they can indeed find a valuable company in the rapidly growing AI infrastructure sector. So to wrap things up, AI Infrastructure Acquisition Corp has successfully completed its IPO and secured substantial funding, which is now held in trust. Their immediate future is all about the hunt for the right acquisition. It is a high-stakes game of finding a target that will create value for shareholders. For now, all eyes are on management to see who they will bring into the fold. Alright, that is our breakdown of AI Infrastructure Acquisition Corp. Its initial filing, what is your take on SPACs and their role in the market? Do you think their strategy of acquiring an AI infrastructure company is a smart move? Let me know your thoughts in the comments below. If you found this dive insightful, a like button tap would be fantastic, and remember to subscribe for more corporate explorations. And definitely check out the Discord link in the description to connect with fellow analysts. Thanks for watching, and we will decode another company soon.